There is a good probability Bitcoin could be outlawed by the United States. Those are the words of Ray Dalio during a rare interview where he talked to Yahoo's Andrew Server. In this video, we examine and review some of the more critical pieces of that long 30-minute call where Dalio says some incredible things regarding China, Bitcoin, the Federal Reserve, and the future of our markets. The first topic of interest we're going to go over is stimulus. As you may know, the United States is now on its third COVID bill intended to help Americans get through this pandemic. To fund these actions, the Fed has printed an unimaginable amount of money. This chart right here, published by the St. Louis Federal Reserve, captures this in one simple graphic: the currency in circulation graph, the holy grail for doomsdayers and Fed haters. This is the amount of money that has been issued by monetary authorities minus currency that has been removed from an economy. As you can see, starting around 2009, the Fed stepped up their money printing program. And with COVID, this chart now looks like it's headed straight to the moon. We currently have almost 4 times the amount of money in circulation as we did in 2000, just 21 years ago. This is obviously raising some alarms. In this clip, Dalio looks to answer the all-important question: are we doomed as a country for doing this? Is inflation or hyperinflation going to show its ugly head in the years to come? Here, Dalio answers.
And am I to understand then that you think there's too much stimulus coming from Washington at this point, Ray?
It depends, like you say, too much for what? Too much for the supply demand? Mm-hmm. Yes, probably. Okay, we'll get into that. Too much because fast, a lot of people needed to get a lot of money. Okay, if you look at the needs, and a lot of things like, okay, err on the side of too much. There was, we have a big wealth gap. We have a big opportunity gap. We have big gaps that are issues. We see it here. I work, my wife, particularly in the state of Connecticut, works with disengaged and disconnected students, high school students in poor neighborhoods and so on. And you see their conditions and what the budgets are. There are a lot of needs. So I'm not saying the needs are not there. I'm saying just the way the machine works, the reality of it is, you're making this big supply demand move, but that it's not like it doesn't have risks and costs associated with it. So from the market's point of view, it's a real big deal.
Yeah. So does that mean, you sort of flood the zone to mitigate and obviate these sort of social problems, and sort of by definition, you're going to overshoot and then we have to deal with those consequences?
Yeah.
As you just heard, Ray is clearly concerned about the rapidly deteriorating condition of the US dollar, but he is slightly soft on his words here, choosing to be politically correct in his answer. Obviously, as a billionaire, I think it would be a terrible look for Dalio to state that he's completely against stimulus. He may even actually feel for the millions of Americans who are struggling with this year-long lockdown and all the other things COVID has brought to the United States. He doesn't want to outright bash checks going straight into poor American hands. But if you read between the lines, he's saying that this much stimulus is clearly setting up the country for severe problems going forward. This then leads to our second topic, which is the stock market bubble. Obviously, with fixed rates going down to zero, everyone is chasing yields in the stock market, which makes it shoot upwards. Warren Buffett famously called interest rates gravity in the world of finance, and with rates nearly at zero, you can guess what's been happening to stock prices in recent years. Since March of last year, the stock market has been on a winning streak unlike any other. We've got wild speculation occurring in a wide array of assets, ranging from cryptocurrencies to meme stocks. Dalio was asked by Andrew where he thinks we currently are, and if he's predicting this bubble will pop. His answer may shock you. Take a listen.
A lot of new ideas, new technologies, new things come along, and they make fabulous revolutions, and they grow things, and that's great. But there's a tendency of investors to extrapolate the past and and not pay too much attention to price. And when that happens, you start to emerge as somewhat of a bubble. By our measures, the bubble is not as what it was in 2000 and not what it was in 1929, but it's kind of like halfway there if I look at the types of qualities. In other words, and so what that means from a value point of view, if you're calculating, what can I realistically expect? Its expected returns shrink relative to the others. However, the kind of the meat and potatoes type of companies didn't benefit as much from those, and they're fairly stable and so on. And so that's why you're starting to see that kind of rotation.
This shocking market has had its fair share of impossibles happen. Wild things ranging from GameStop stock going from $3 to $400 and the 30-year mortgage rate at one point hitting 2.5%. Arguably the biggest story of the year, however, is Bitcoin. The internet cryptocurrency went from a $0 market cap in 2011 to over $1 trillion today. Yes, that's with a T. Billionaires like Elon have shown love to the coin, but others like Charlie Munger have called it downright inhumane. Few Bitcoin bears remain even among the billionaires, so it's very interesting to hear what he has to say about the coin following its epic rise to $60,000. Dalio's answer to this question is probably the most shocking part of the interview. But before I show you the clip, I just want to give you a quick reminder. If you're enjoying the content, please consider subscribing to my channel. Now back to Dalio.
But because those two assets, cash and bonds, were such bad investments relative to other things, there was the movement to those other things still, and then the government outlawed them. I mean, things like gold. They outlawed gold. That's why also outlawing Bitcoin is, a good probability, and that they also established foreign exchange controls because they don't want the money to go elsewhere.
Let me jump in, Ray, because that comment you made about Bitcoin. I mean, so it's a two-part question. Is that in a bubble? Maybe three-part question. Is it dangerous? And what do you think the likelihood of the government outlawing it is? And is that even feasible?
Bitcoin has proven itself over the last 10 years. It proved it hasn't been hacked. It's by and large, therefore, worked on an operational basis. It has built a significant following. It is an alternative, in a sense, storehold of wealth. It's like a digital cash. And those are the pluses. Bubbles are financial assets that have imputed value. It's an asset that doesn't have intrinsic value. It has imputed value. It's whatever we think it is. And if you look at some of the bubbles in the past, a great book is Extraordinary Popular Delusions and the Madness of the Crowds by McKay, 1845 or something. But he talks about the South Sea bubble, and he talks about the Mississippi bubble and so on. It is when people love it. It's the dot-com bubble and so on. And that could be. So when you look at Bitcoin, it's a possibility. It's an alternative because there aren't many such assets. There are not so many assets that might have intrinsic value that can't be messed around. As far as the government allowing it, the history was, banks always used to exist. And then with the Bank of England, they decided that it was in their interest to have a monopoly on banking at a country. And so what we did is every country treasures its monopoly on controlling the supply and demand. They don't want other monies to be operating or competing because things can get out of control. So I think that it would be very likely that you will have it under a certain set of circumstances outlawed the way gold was outlawed. And you're watching that question arise in India today. India today is making the move to outlaw possession of it. Okay, so we have to see what that means. Now, can they do it? Now we get into the particulars. My understanding from people who are sort of in government surveillance and go on is, yes, they can understand, they can track it, they can know who's dealing with it. I don't know, I'm not an expert on that. But there's a whole way. Is it private wallets? Is it not private wallets? How do you do this, and the other thing? I would suspect it would be very hard to hold up against that kind of action. So that's what it looks like to me.
This answer is obviously going to upset a lot of people, but it's also one that has been brought up many times by various prominent media figures. We know that governments take extreme measures to ensure that their currencies are protected and intact. The United States and the dollar, the world's reserve currency, take this to the extreme. Some even argued that we take over countries refusing to bow their heads to the dollar or threaten its status as the world's reserve. So the question many have asked is why the government would allow a competing currency to come up legally. Dalio states that even when other assets like gold threaten other aspects of government interests, the government isn't hesitant to outlaw it. Many don't know this, but the United States did in fact make private gold ownership illegal in 1933, a law that was not repealed until President Ford came along in 1974. He uses this as an example as a way to showcase the fact that nothing will stop the government from doing the same with Bitcoin, as evident with India's recent actions. If you want to listen to the full 30-minute interview, I have left the link in the description below. Thank you guys for watching, and as always, please make sure you hit that subscribe button if you enjoyed.